Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news the IMF says the world is back in a rising expansion track, even if it is pretty modest by past standards. In China, according to their official survey, their factory sector bounced back to an expansion in January. This was an unexpected improvement. Better yet for them, their services sector survey recorded a very large improvement, one that indicates the non-manufacturing sector is expanding at its fastest pace in 7 months. This was also very much better than anticipated. Most analysts had expected both sectors to struggle for some months yet as they reopened. Both indicators, if they're confirmed by the private surveys, will probably light a fire under commodity prices in the days and weeks to come. In American retail sales picked up a bit last week on a same-store basis, but are still expanding barely higher than US inflation, which has been the case all January. In the factory sector, the Chicago PMI was also unchanged but remained in contraction, and for its 5th month in this heartland area. It's not a great start to the year for them. But most American focus has now turned to tomorrow's US Fed decisions. The EU managed to eke out a minor expansion in the overall fourth quarter result, which took their annual growth to 1.9% and slightly better than expected. Markets were expecting a small overall contraction in this last quarter. In Norway, their sovereign wealth fund, one of the world's largest investors, posted a record loss of $250 billion for 2022, bringing to an end a 3-year run of soaring profits as their stock and bond holdings were hit by the Ukraine war and inflation. Through all this data chatter and changes, the IMF says global growth is projected to fall from an estimated 3.4% last year to 2.9% this year and then rise to 3.1% in 2024. These are higher estimates than those made in October, especially for 2023. They also see inflation easing. US Treasury 10-year yield starts today at 3.53% and down 2 basis points from this time yesterday. And the price of gold will open today at $1,927 an ounce, and up a mere $3 from this time yesterday. And oil prices start today at down another 50 US cents, just under $78.50 a barrel in the US, while the international Brent price is just on $85 a barrel. The continued fall in the natural gas price is something to behold, now back below long-term averages. And the Kiwi dollar is softish at 64.6 US cents. Against the Australian dollar, we start today at 91.7 Australian cents and unchanged. Against the euro, we're softish at 59.5 euro cents. That all means our trade-weighted index starts today at 71.4 and down 20 basis points from yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.